Hello, we are gonna talk about one of my personal darlings, Alibaba. And I'm gonna explain why I think the company and the stock will crash it in 2022, potentially, or maybe next year. I mean, this kind of depends on what the market is doing overall as well. Now, you have to bear in mind, and it's very, very important to understand that when a sector goes down as a whole, all the stocks, or the vast majority, tend to go down as well, because there is a lot of selling. And so, if there is a crash in the markets, or if the markets are just not buying into stocks, then Alibaba will go down as well. Now, it may not go down as much as other overvalued companies, of course, but overall, this tends to put a selling pressure on the stock market as a total, as a whole, and you could expect a little bit of a downturn. However, as investors and as value investors, we don't really care about these kinds of situations. We don't really care about a company going down in terms of the market sentiment, or what's the current market cycle is, whether it's a bullish or a bearish cycle. What we do care about is how the company is performing financially and about its operations. And this is why I wanted to make this video, just to explain why a company that's down 56%, 57 in a year, it's still a fantastic buy in my eyes. And I will explain that not just because it's trendy. I'm not gonna say that the company is trendy and it's making fantastic products and it's gonna be growing massively over the years and all that jazz that some some YouTubers mention, and they're just making a case for potentially buying the stock, because that doesn't mean anything. I mean, you can do that with any stock, you can do that with any company. But the thing is, if you want to be objective, you have to actually examine what's going on with the financials of the company. And remember, one day doesn't mean anything, 1 year doesn't mean anything. We want to be buying companies and hold them for 10 years potentially, and then we see what kind of benefits we get out of those. And as you know, Alibaba has been going down and down and down because of the recent news from China, and there have been some stocks that got delisted, some companies got delisted, and there have been some discussions about some of the data that's coming from China. Now, the thing is that Charlie Munger himself has actually massively invested into Baba, and so that gives me a little bit of confidence about the Alibaba's numbers, and that's one of the reasons why I also invested in Alibaba, and I think it's gonna do well, and let me tell you why. So currently, the current PE is sitting at around 16, which is a fairly low PE, especially for a tech company. And the outstanding shares of the company are going up a little bit, which is not great to see, but it can be okay if all the other numbers are fine and are adjusting to what we want to see them adjust with. And let's take a closer look at the actual financials of the company now, which is the most important thing, obviously, how much money the company is making. And we have examined those before, and you will see that the company is growing in revenue. So there, you may have been reading about revenue concerns here, but I'm not seeing that in the financials. I mean, the revenue seems to be growing very nicely, and this is why I was saying that most of the things that you are reading about are kind of like bearish and negative content. Don't really adjust with what you are looking at when you take a look at the financials. Actually, it's just that few investors actually take the time to look in detail on the financials, on the financial aspect of the company. And you will see here that let me find the net income. Look at the net income of the company. Yes, it's been down a little bit, but still, that's massive, and it's massive growth from what it used to be in 2017. Right now, making 20 billion, and that's accounted for US dollars, by the way. So, take a look at the balance sheet over here. You will see that the total equity of the company also growing massively from 46 billion to 170 billion. That's a lot. I mean, that's from 2017, that's almost 4 times as much. It's actually probably more. It's about 4 times. So, cash flow. Cash flow of the company over here, the cash from operations, look at that, growing and growing and growing. Again, a little bit of lesser growth over here, actually a little bit of a downturn over here, but still, I mean, it's $30 billion and massively more from 2017. And companies investing as normal, cash from financing. I mean, this company has a lot of money anyway, so even if they are getting some debt, I wouldn't be worried unless I see that their cash flow is not good enough. But we can actually take a look at that, see the total liabilities of the company, just to make sure. Let me find the total liabilities here. 97 billion. Company is making, let's take a look at the cash flow. 97 billion is the total liabilities. And so the company is making 25 billion or 30 even in some years of free cash flow every year. So they can pay their liabilities in like 3 years if they wanted to, 3 to 4 years. So that's totally fine. They don't have a lot of debt. That couldn't cause any issues really. And yeah, this kind of financing can be part of their operations, and it's not worrying me at all really, based on the free cash flow, because that's what matters. Like 10 billion, 16 billion, 17, 20, 21, 29, 24. Yeah, last 12 months a little bit worse, but still, again, it's fantastic free cash flow. And when you compare it to the market cap of the company, which is like 300 billion, the free cash flow of 25 billion, if you give it a multiple of 10, actually, a multiple of 10 for a tech company like Alibaba, it's $240 billion, very, very close to this market cap. If you give it a multiple of 15, you surpass that market cap. And a multiple of 20, which is double of 10, it's like $480 billion of a market cap. So a multiple of 20 massively surpasses the current market cap, which is kind of insane for such a company. And it's also a multiple of the free cash flow. It's not even the earnings. So that's more indicative of what the company is making and what the worth of the company is. And so this is why I feel that Alibaba is a fantastic opportunity. And as it's actually going down, I think people who buy it even at these lower levels are going to be very, very highly rewarded potentially. But for me, this company is absolutely a buy. And as long as the narrative, and it will at some point cease to exist and die down, I think the company will start growing again, and I wouldn't be surprised if it reaches 300 again very, very soon, to tell you the truth, especially if the market enters a normal uptrend, as it's normally doing, really, and this current down cycle evaporates at some point, which it will, but it can take a little bit of time. And so this can only give us a better price for people who want to enter. But this is what I wanted to talk about. I'm all about value in this YouTube channel. I'm not gonna hype up any stock just to gain views. That's not gonna happen here. I just want to provide value to my viewers so that they make the best purchases as possible and avoid pitfalls like the RKK fund, for instance, which if you bought, you could have lost your shirt on it. So make sure you buy value, and I will be following up with more value companies later in my later videos. And if you did enjoy, please subscribe and leave a like on this video. And I'd love to see you in our Discord channel. You can find the link in the description below, where we're a few like-minded people talking about investment topics, and we definitely like to grow our community. So come join us, and let's have a talk about all sorts of things investing. So thanks for watching this one, and I'll see you in the next video. Bye bye.